Tata Motors will be selling a 9.9% stake to TPG Rise Climate for 1,613 crores. Aniket Mhatre joins in. He's the analyst at HDFC Securities. Aniket, Tata Motors is making all the right noises, right? They are, of course, doing well in their core business. Now they're unlocking value for shareholders. They're, cleaning up their balance sheet. But at this price, at 670 almost, is the risk reward still favorable for investors?
Hi, Sonia. Good morning. Thanks for having me on your show. So on Tata Motors, our call, we do not have a positive rating on the call. We actually have a sell just because we do not expect the current margins at JLR to sustain going forward. For the simple reason that if you look at all the peers today, luxury peers, right? Everybody is selling their best product at the best margin. Once the supply chain issues are behind and which we are seeing are gradually receding, I think your mix will also normalize and your marketing spends will also normalize, which would sort of in turn lead to margin pressure, which is why we have a cautious stance on Tata Motors at the moment. Back home in India, if you see, they are losing market share both in passenger vehicles and commercial vehicles for quite a few quarters now, which is also concerning given the stock up move right now that we have seen, which sort of again leads us to a cautious view at this moment.
Okay, that's interesting. So you're saying that you have a sell call on Tata Motors. They're losing market share in the passenger and commercial vehicle back home, and you don't expect the JLR margins to sustain. But particularly on this, this Tata Technologies stake sale, what is your view? Because I think this was expected before the Tata Technologies IPO. But given that, we are in the process of unlocking perhaps more value for shareholders by Tata Motors, do you think the market would take it well?
Right. So if you see, Tata Technologies was already coming up with an IPO, right? So even in our model, we have factored in about 40 rupees per share for Tata Technologies from the stake sale. So this value unlocking story is already there. I don't think this is an incremental positive. Yes, the last few years, Tata Motors has certainly done very well to unlock value in key subsidiaries and hence try to hive off their debt. Our key concern, as I said, is on the margin sustainability story. Clearly, if margins sustain, clearly they will do very well even from here. But that's where we tend to differ from the street at the moment. I think maybe a quarter more where mix will be favorable, and then beyond that, I think mix will start normalizing, and even a discount will start picking up. Especially given where we are in the global macro scenario, where key geographies are seeing macro headwinds. Right, in that scenario, we see some headwinds to Tata Motors. JLR piece for sure.
Okay.
So, did you see that story? I read it on Twitter. I don't know if it's even true. So maybe you take it with a pinch of salt and confirm yourself. Tesla's base model price has apparently dropped, and it now matches, sort of ICE engine pricing.
Okay.
So it's. I don't think it impacts the luxury segment, but I thought it was pretty astonishing because it was considered the premium and much more expensive, etc. But maybe it's because demand is looking a little wobbly or whatever, but maybe also because costs are coming down, right? Battery costs, etc.
But that's interesting, right? Aniket, we also have the entire auto pack starting to report their numbers, and it's going to be an interesting one, a mixed bag perhaps, because margins are set to improve, but demand continues to be hit in certain pockets, right? Like passenger vehicles, the affordable segment, etc. What would your pick of the pack be this earnings season?
Sure. So if you look at the overall volumes, right, for two-wheelers, for instance, we are expecting a 1% volume decline this quarter for the simple reason that the entry-level segment has just not picked up. Passenger vehicles continue to do very well. They are expected to deliver a 9% growth. Even commercial vehicles have done reasonably well. Tractors, on the other hand, continue to remain weak. So in terms of earnings growth, just one point on margins. Clearly, as you rightly pointed out, margin improvement is expected year on year, but where the outperformance will be is where earnings margins will improve on a sequential basis, which will happen on the back of operating leverage benefits. Now, if you see passenger vehicle category per se, the likes of Maruti, I think they are expected to outperform this quarter. They have, from a mix perspective, in UVs, Maruti's mix is the most favorable right now. They have moved to a 33% UV mix in this quarter, quarter from a 25% mix last quarter. So clearly Maruti's mix is extremely favorable, and we expect a very strong margin improvement in Maruti. Coming to some of the peers like two-wheelers, for instance, TVS has done extremely well again. TVS has delivered a 13% volume growth even on a sequential basis, which has outperformed peers which have grown anywhere in the single-digit range. So TVS tends to outperform, and hence even margin expansion at TVS is looking very strong on a sequential basis. So TVS and Maruti, I think, on a sequential basis should deliver a very good earnings performance in my view.
In fact, on TVS, right, there was this DAM Capital report on TVS, a huge price upgrade. I'm sure you took note of that. They've raised their target price to 3,050 on TVS. I mean, it was 1,875 earlier. Would you concur with that view that, TVS is going to become an export engine, and that could perhaps lead to a big re-rating on the stock? And what's your own target price?
So won't comment on specific report, but suffice to say that if you look at the recent noise around TVS, right, even the management has indicated recently that they would want to get exports to about 50% of the overall mix. Now that's a clear incremental positive where we were not expecting such a strong story develop around the exports, or a fast pickup in exports for that matter, right? We were always expecting TVS to do well in exports, but not such a fast ramp up in exports. Domestic, they are already doing very well. They are gaining share, etc. But even exports, they are now talking about a 50% mix in their overall volumes, which should be favorable for their mix and also for their margins. So clearly, TVS remains one of our top picks in the auto space at this stage.
All right, Aniket, we'll leave it at that. Thanks a lot for joining in and taking us through, your views on the auto sector.